inviting me down to Red Cloud. This is actually my first time down here. What a gorgeous town, full of history. I'm so glad that it was nice weather so that we weren't going through this with rain. But the rain that I hope you guys have gotten some good rain. We finally got some up north, and we were very thankful for it. So rain is a good thing. I appreciate Sharon's comments about being an expert. I don't know, Steve, do you feel like you're an expert in housing? And you've been doing housing for how many years, you know? Pat's been involved in housing for a number of years, and I don't think any of us are really experts because things keep changing, and every town is unique, so there's no cookie cutter. And I want you to know that when we go into a community, we don't do cookie cutter. We look at what that community needs and try to tailor it for what their needs are and modify things. We've got some ideas of how we can start, but it really has to come from the community and what are your needs. So nobody's an expert. We're all just learning as we go and doing the very best we can. I had them hand out 2 brochures. The first one I want to just kind of touch on in the Investing in the Future brochure. That is kind of a blush. It's our return on investment brochure of kind of where we've been as far as the housing. Now, we've listed all 17 of our counties. Before we kind of merged back with the district, we were taking care of the district's 15 counties that they had at that time, and then 2 others in Sharon South Central. You're going to see some repeats on some of this because we have regional, some of them are regional programs, some of them are individual programs. And so, like for an owner-occupied rehab, we started out, Pat was there with our first contract negotiation. That was my introduction to housing because the grant had already been written by somebody, and we were going through contract negotiation for an owner-occupied rehab. We had done clusters of like 4 counties at a time, 4 or 5, and to provide housing rehab funds for 20 plus houses. And our next one after that was another cluster of counties. We figured that if we went to one county and did 20 houses, it would be, every 2 years, it'd be 34 years before we got to the last county, and that didn't make any sense. Since that time, things have kind of changed, and so now we're just doing regional. So when we get a grant, it's not clustered, it's just regional, all 17 counties, because then we can move those funds faster, because that's really the name of the game anymore. Get the funds out there, get them committed, and take care of our constituents as quickly as we can. So that was my first introduction to housing, and so that was actually the month before that. I went to a tax credit workshop, if you will, and tax credits are complex. I came out of that going, wow, I just found out what I don't want to do. Okay? I just sat here and learned what I don't want to do. And guess what? And 6 months later, I was starting a tax credit project. I don't know how I got roped into that. But, so we started out with owner-occupied rehab. We started working with down payment assistance. And then we kind of slid into the tax credit project, which was a partnership of the pre-New Neighborhoods program, kind of, is what it was. It was kind of new neighborhoods, but we weren't qualified for that up in O'Neill. And so there was another opportunity that we fit that project into. So anybody talks about a learning curve, there is no curve in housing, it's straight up. And so that's kind of where we cut our teeth, to be honest with you, was those 3 projects. And I have a really outstanding board. We know that there's needs out there, and they're very supportive of, well, let's try something different. Well, so-and-so says they tried that and that didn't work. Well, that was how many years ago? Let's try it again. And so we've tried a number of programs. In addition to those that I spoke about, we've got some spec building that's going on. We've got a duplex that is being built, and it's in conjunction with the Village of Stewart's Housing Authority, if you will. And I heard today that should be done by August 1. And so we're starting to take applications for those units. So we've done that. We were the recipients of Neighborhood Stabilization Program, NSP1 funds, where we were able to demolish some properties. We were really told by the census tracts as to where we could go. Here's the communities you can go, here's the amount of money, go for it. And so we did that. You're not going to see that again for demolition. I can tell you that. It was once in a lifetime, wasn't it, Pat? Yeah. Actually, if I remember right, we were all supposed to, when this first came down, we were all supposed to turn in what our needs were. And across the state, if I remember right, just for demolition only, they had a request for $6.9 million. That's not how much was funded. And so when we went on the tour today, and there was a lot of discussion about, some housing that needs to be demolished, I go back to, that was a great opportunity, but now those funds are not there anymore. What can we do locally? That's something that we're going to have to look at more and more, is what your opportunities are locally and stuff. Yes?
Well, and rec fund does need to look at things from a different perspective, because people don't come here to see our present, they come to see our past.
Right.
And so we're looking for things that help us rehab something. I mean, we realize some things need to go.
Right.
There's just, but I mean, it is a different perspective that we need to take on than some other communities do.
And I'm glad you brought that up, because when it comes to owner-occupied rehab,
yeah,
we have to, everyone has to, when you are going to work on a house, we have to send in a request to the State Historic Preservation Office. That's one of our environmental review requirements. And so for towns like Red Cloud, and for areas that do have that historic, it's a different animal as far as how you're going to do that rehab on that house. And so I'm glad you brought that up. Very important, because we want to be able to maintain that historic preservation of some of these homes. Yes, Pat?
I was just going to say another challenge that goes with that, because we have had that program here before. We are limited generally up to maybe $25,000 per
Right.
rehab.
Right.
And those on the tour, or those that live here, what rehab costs are. And it can go well above that, even though the plan is maybe not to.
Right, exactly.
Once you get started on a rehab project, you're not sure what you're going to get into until you're well into it. And so that's one of the other things, one of the challenges to me, and it can't be overcome. And like your family has done so well, there's a number of houses that have been restored, but it really needs to be thought out ahead of time.
Well, another thing too, on the projects that years back, you have these overnight carpenters that came from, I don't know where, they left fast. But, they could underbid a lot of projects to get the bid on it, and then, their work wasn't close to being accurate, just shoddy stuff, and they did the job, but then they're gone, and what are we left with?
Right. Yes.
And I might add, several of us who live in the designated historic districts of Red Cloud just 2 or 3 weeks ago received a letter from the state, from the Historic Preservation Office, about the VIP program. That is where if you have a historic property and you restore it, renovate it, then your property tax will increase. But if it's okayed by the state, then it increases at a much slower rate.
Fixed for 8 years.
Yes, is it 8 years?
8 years.
Yeah.
Okay.
So that's a positive thing amongst.
The time frame and
Sure.
the things that are required
Sure. Andrea asked if I could walk through the owner-occupied rehab process, and I'm very glad to do that. It depends on where the grant source funds come from. It used to be that we got CBG and home, and those are both federal programs for owner-occupied rehab. The state did not utilize, at least when I started out, did not utilize trust funds, which are state funds for owner-occupied rehab. And so the income limit for both the CDBG and home was 80% of the area median income. Now we have the opportunity, because of the way we're structured, we're no longer eligible for home funds. And so we are applying to the trust funds, the state trust funds for owner-occupied rehab, which increases the income limit for the household that's applying for those funds to 100%, which opens up the door to help more than who could before, which is great. If a community is applying for those funds, then through CDBG, those are still limited to 80% because of that funding sources limit. So here's the process. A household applies. They have to provide income documentation, ownership, insurance proof that the taxes are paid on the property. If they are deemed to be income eligible and all those other things are eligible, then we schedule an inspection of the property. An inspector goes out, and there are standards, minimum standards that the state has designated. There's some things that have to be done in that house. If it's not in that condition now, through that rehabilitation, then you have to bring that home up to those standards. So a family is going to say, yeah, but that's not what I wanted to do. I wanted to do this. Well, the requirements are that it has to be brought up to minimum standards. So the inspector is going to take and look at all of those things first, and then the family is going to say, oh, this is my list of what I want to do. So then the inspector goes along and prioritizes all the things that need to be done, and then what do they want to do? You know, it could be energy efficiencies and stuff like that, new windows, doors, siding, something like that, that will help make that house better, but we've got a $25,000 limit. So then that inspector is going to say, okay, these are the things you have to do, these are the priorities, and then here's the really great to do if we've got the money left over type thing. Then we approve that. If it's within that $25,000 limit, then there's a lien put on the house, and the loan paperwork go out for bid, and once we get the bids and all that stuff, then we're good to go. We can get a notice to proceed and get the work accomplished. So that's kind of it in a nutshell. For the housing, we don't, right now they're not requiring any matching funds. I know with some other CDBG for infrastructure, for town, they are requiring a matching. They don't for the housing. Another piece of it is CDBG for infrastructure or business. There are certain requirements for LMI and all that stuff. When it comes to housing, the applicant is the one that has to income qualify. So just because a community applies for CDBG funds, if the LMI that has been designated for that town is over or even under 50% of the area median income, it doesn't matter because it's not the town that has to qualify, it's the household. So it's a really good little program.
As far as the liens and stuff, you take a second behind the bank? Or?
Yes.
Can you give us a ballpark figure of where that usually comes out? So like, for a community like this,
As far as ballpark.
like income qualifications and whatever?
I'd have to go on the, I did not look that information up before I came here. I can always get that off the web.
Susie, if you look at the community needs assessment that we just did, those were 80% incomes.
Okay.
So we can go back to that. So
Right.
Okay.
I have asked Judy to be available along with our people that know housing, Cheryl Larson and Pat Compton. So let's let her give her presentation, and then over the lunch hour, we can ask all the questions and make all the comments that we want, but I want her to be able to get through what she's prepared for us.
Okay, thank you, Sharon. Okay, so that's kind of where we've been in the past. This other brochure, very quickly, Sharon shared with you that the Central Nebraska Economic Development District and the housing developers are coming together. We're still two organizations, but we have formed an alliance together, and there's no longer any staffing for the housing. The staff that was the housing is now with the district, and we have a formal relationship by contract. And so we're all CDBG certified, and now we're expanding. We're not only including housing. As you can see inside here, we're doing business and industry, community and economic development, education, disaster recovery planning. Like Sharon's group, we rely on memberships with our counties and communities. For funds that come in, we are applying for federal economic development administration funds. We have to provide a match for that. And so that's part of our funding. I want to thank Steve Peregrine with NIFA. When we first started with the housing side, Ted Simpson with NIFA came to me and said, "You need some money?" And I went, "Yeah." And so he kind of guided me through. There's some requirements that we had to do to be able to become a NIFA outreach partner. And I have to tell you, that was it was godsend to help us be able to do our housing and to bring us up to speed as quickly as we could. We could not have done what we were doing without the funding from NIFA, the funding from DED that we got. We just wouldn't have been able to survive. So thank you very much to Steve and to Pat and all of you guys who had helped us get started. Now, NIFA has invited us to be an advanced, is that what it is? Advanced outreach partner. And so those funds are being partnered with membership and EDA funds on behalf of our region as well. And we've got some, we've kind of presented a plan of what we want to use the funds for housing. Their funds are going to be used for housing, but just because we're all in the district doesn't mean we're going to forget about housing, because every single community we go into, that's one of the first things they say is, what can you help us with housing? If you want to get a business in here, the problem is I don't have any housing for my people to come. So Pat and I were talking earlier, housing is a huge, huge animal. And we've got to start taking bites at a time in the communities. And the funding that we get from the state and federal government helps, but it's not the answer for everything, because we're going to have to work locally in each community, for each community, to be able to improve housing. So that takes me to the next piece. Mel, could you hand out something for me? Yeah, I've got plenty here. I'll go back to my notes here while they're handing that stuff out. Okay. I can't tell you how many times I've heard these statements. We have young families who want to move home, but there are no houses in town. So-and-so wants to move off the farm and into town, but there are no houses available. I'd like to move out of this big old house into something smaller, but everything available needs a lot of work. We can't recruit teachers because there's nowhere for them to live. How many of you heard that in your communities? And more. Okay. When I ask communities what kind of housing they need, be it starter homes, mid-range prices, market rate, senior housing, second story, you know what the answer is? Everything. And that's a tough one, because these communities do need everything, and where on earth do you start? It's really tough. Okay. Where to start? I did not do this when I started. Like I said, we started with the owner-occupied rehab. We've been doing the down payment assistance. We've been working with communities to do some spec homes. You know, we've just kind of hit and missed different places, and we've been very fortunate in what we've done. But now that we're entering that arena where it's not just low income, we need some more planning. And so that's why I had them hand out some pages from the Rural Housing Playbook. Now, I did not create this. I did not even find it. Melissa Garcia with Custer County Economic Development mentioned this one day, and I said, where did you get it? And so she told me, you can go on the web and you can get it. This is just some excerpts from the book. But what I thought was important was these pages, just to kind of get you guys started. If you turn to the inside page, it talks about the Rural Housing Manifesto. There's a housing cycle of rental and multifamily. There's affordable and starter homes. There's move-up homes, independent housing, assisted living, and skilled care. And when I first started, and I was working with Ted Simpson from NIFA, he described a wagon wheel, kind of different kinds of housing, and every community needs the different kinds of housing. They don't need just one, they don't need just another, because they need a variety for the variety of people in their communities. So I thought this was important for you guys to see that. On the next page, I think you can see the highlighted green. And this playbook is from South Dakota, but it had some really good things in there. And some observations that and I don't remember when they did this, it's been a few years ago. But it says, we simply quit building new homes in small towns around 30 years ago. And I think that's exactly right. And as I've been looking at census numbers, I don't remember, I brought my whole playbook here. I think I had some numbers that I had presented to, if I still have my notes, maybe I don't. To the NIFA board, was it last August at your strategic planning? In my 17 counties, okay, which is part of the northern section of this network, 63% of the homes were built before 1970. And 8 to 20% were built from 1990 on. And what I'm seeing with the numbers is that the number of new homes is going down, and the number of vacant and unoccupied homes is going up. And here's the problem. If we're trying to recruit people back into small towns, we don't have any place for the people that are here already to live, let alone somebody coming in. So it's a tough thing to try to figure out how to, that's why it's a big animal to try and take bites of. You know, is it fixing up what you have and keeping that? Is it building new? Is it creating apartments on second story to bring some of those young folks in, so some young professionals that can at least get here, and then they decide they want to stay here, they want to make a life here, and then they can build a home, have the equity to do that. There's all kinds of theories. You know, is it fixing up older homes? At the same time, you're building duplexes for senior citizens to move into and have those big homes that are available for the families coming in. The Village of Page is a really good example. They got a grant from the state, oh gosh, it's been about 10 years ago? And they saw a need, they were trying to save their school, and they had some big homes in there that were occupied from seniors, maybe one person. The widow was living in this big house, and trying to take care of it, and they really wanted a small place to live. They wanted to be able to pass their house on to families. And so they got a grant from the state to build a duplex. And I think as of maybe 2 years ago, they had still had the same 2 tenants in there. And one finally moved out, or I don't know if she went into a nursing home, I don't remember. And I know a lot of people from Page. But that opened up, those houses. It was a great little project. They had a lot of partnership. They got funds from the state, but it wasn't everything to build that duplex. They had contractors and people in town that were donating time and materials to build that duplex because it was so important. Unfortunately, they did lose their school anyway, but that was what their intention was. So that's what I'm seeing. I'm seeing less homes being built, more homes being vacant and just left. Every community's got them. That was Grandma's house. I don't want to get rid of Grandma's house. It's a treasure to me and my family. But they're sitting there and they're deteriorating, and nobody's living in there. Could be animals that are moving in. It's unsafe for the community. So it's a tough situation. So I wanted you to know about that. Okay. On page 1-12, it talks about rethinking rural housing. And we've kind of alluded to that already. If you're, trying to grow the business, then you're trying to grow your population. And then this all impacts your schools, and we're all trying to keep our schools out here. Individual for our communities, we want to save our schools. We need to have increased involvement in housing. It's got to be just as important as creating businesses in your community. And then creating neighborhoods, It used to be neighborhoods had kind of their own little identity. I think that we've lost some of that, and we need to get some of that back, of watching out for each other. I know how busy I get, and I forget about my neighbor. Now I'm in the country, so my neighbor is like half a mile. But we still need to have our community be somewhere where we can have people move, bring their families, and feel like a community. So creating that neighborhood environment is going to be important as well. Okay, so where on earth do you begin? And this is a hard one. This is a hard one because some communities that I've worked with, I guess I should back up. Okay, I brought an example. Nebraska Investment Finance Authority has a housing study grant program. And we have had a number of our counties and communities partner with NIFA. And a lot of what we started out with was kind of working off of, big housing plans. And working with a planner, community planner, to come out and work with the community, get some public input, look at what the statistics are, what's going on, take pictures in your community, and make some recommendations for what the housing is. And so this is an example of Custer counties. I did grab Custer counties. We did it in Howard County. We've got it in Holt County, Kepaha, Brown, and Rock. You guys have done that. So this is a full-fledged housing study. But you don't have to start with this to get started in housing, because we're going to get back to this. First, you're all here, so you must have an interest in housing. In your communities, can you think of people that have also had an interest in housing? What can we do? Have we had discussions with them about housing? How important is housing, and what can we do? We'll start getting some people together and get your city council or your village board involved in it, because you need to have a partnership. And so what this kind of gives you an example of some people that you might want to start working with. I would go to your city council or your village board and say, we'd like to create a committee. Do you have a problem with that? I would think that they would say, go for it, you know, because it's all going to be beneficial for the community. So it's listing the mayor, city council or village board members, planning and zoning, chamber of commerce and economic development, industry, utilities, financial services, real estate, schools. Our school board members are very important to be on here. If you've got a higher education, secondary, you know, colleges, community colleges, get them involved. Housing authorities and housing providers are very important to this process. Any special needs professionals. That's kind of your start, okay? That's not going to be your committee, because these are the people that kind of say, yeah, we need to do something, okay? Also, you want to make sure that you're not leaving any sectors out, okay? You want to have all ages to be involved in this. Families with or without children, senior citizens who have been in the community and have a vested interest in the community, the youth. You've got to get them, because you sure want them to come back and have some pride in their community so that they can say, yeah, I really would like to either stay here or come back. And then also, don't forget your incomes. You know, you don't want to have all higher income people. You want lower, mixed, because everyone's opinion matters. Everyone's got a different perspective that someone else might not even, they might not get that. Now, some of this was just kind of, I provided some information for you. Let me explain what I'm going to be doing in Arcadia, because I'm going to really start putting this plan together in Arcadia. I met with the village clerk yesterday, and we started brainstorming some people who might be good on a committee. But before we're even going to create the committee, I am meeting with the village board, and we're going to be meeting on June 30th. Just to kind of start talking, because they're going to have some other ideas of people that need to be on a committee. And we want their blessing. We don't want to start jumping into something that the village board or the city council doesn't know anything about. I think that's super important that they are in the loop as to what's going on. Now, what did I... Hang on. I made some notes. Don't forget your veterans. They're important too, because we want them to be a part of the community and feel a part of community. So the next thing that I had here was, you know, you can, if you get your city council or your village board approval, then you can form a committee, and they may have some great ideas. And I don't know, with Arcadia, I'm not sure if this is how we're going to do it, but my idea was, once we get a kind of a committee formed, or at least a start, I'm going to have a picnic in the park. I'm going to cook hot dogs and have chips, and we're just going to have a very informal sit around, gather around, talk about it. Because then you'll start hearing people's interest in what they're good at, and who's kind of the movers and the shakers, just to get them started and make them feel welcome. So once you start doing that, then you can get some assignments. And one of your assignments is going to be kind of a windshield survey. And go through town, and let's make a list of the older homes that are in great shape, the older homes that need work. What do we have? What do we have for an inventory of our town? Because then we have something we can start working with. On page 4-6, that's when you can start looking at what do we have and what do we think we need. Because that's kind of important. What do we think we need? Because then we can start narrowing down some targeting areas. After that, that's when I think it's time to start doing some assessment. Pat always gave me she had a really good cheat sheet of kind of what you do in town. What do you have? What do you don't have? What are your gaps? And I found this assessment tool in this book. It's not the only one. It's just an example of what you could do and modify it for your community. And make an inventory of what you have. What do you have for your planning and zoning? What are your regulations? And then start determining what's the income of your people in your community. And you can go on the census, you can go on American Fact Finder and find out what the latest is. Now, of course, you're going to probably know those numbers better than the census, but at least gives you an idea of kind of where your breakdown is as far as numbers of age groups and things like that, because then you can start looking at and creating a picture of what your needs are and what do you want it to be. Are we needing some people that are in the 25 to 40 range? Are they moving out and not coming back? How can we get them back into our community? And keep going with this assessment tool. Talk about jobs. What are the economic opportunities in your community? Because that's going to tie into your housing as well. So then you can kind of break it down and you get a picture. Now, there's a community assessment survey. When I was looking at that, it kind of confused me. I threw it in there anyway. I have a big question mark on it. And I think this is really more for what is my perception of my town. That's just my perception. So you could use it, you could not use it. The next one, community housing survey. They gave an example. We have some other surveys that we have used, but I think they need to be updated. And so I am looking at this and try to do some merging to help communities have at least a start for a survey. And one of the questions, I would reorganize these questions because I'm very chronological. So I would reorganize these questions. Some of these are very good questions. One of them I would also ask is, do you know of someone who has expressed an interest in moving back to your community? That starts your list of people that might be interested in coming back. Also put on there, are you interested in helping? And helping with the housing efforts can come in a lot of different forms. Your volunteers can come in a lot of different forms. It could be serving on a committee, or it could be someone in your community that says, I really want to help out, but I'm just not a committee kind of person. But I know so-and-so's on the committee, wants to be on the committee, but it's hard for them to find someone to take care of their kids for evening. So I'm going to offer to take care of kids while they're in their meeting, and that's how I'm helping with this effort. So you don't want to pigeonhole people into certain roles because everything is going to make a difference. Then the next piece, you start, with your committees, you start forming a concept of what it is that you need. Now on page 5-2, I looked at these and went, wow, I would rearrange those because they just didn't make any sense to me. So how did I rearrange these? The first one was, what kind of project will help the community's housing goals? To me, that's your very first. What kind of project meets the community's local planning and zoning regulations and fits within the community's comprehensive plan? How many communities have comprehensive plans? Do you know if you have plans? Not all communities have them. Not all communities want them, But having a comp plan, as I'm learning from Sharon and her group is very important if there's some things that you want to do. So those are the pieces that we're going to be carrying the message on comp plans, the importance of some of these things in creating these housing programs for our communities. Then how many units do you need? You know, you've kind of figured out, okay, what's our top priority? What do we need? Who will be occupying these units? Do you want to purchase and rehab existing homes for resale? Do you want to purchase and rehab existing homes for rent? Do you want to build new homes from the ground up? Do you want to scatter homes throughout your community or build a whole new subdivision? Is there land available? Well, if you did your inventory, you'd kind of know the answer to that. What are the costs you might incur with the various options? And what type of financing is available to help pay for the project? So if you start funneling these things down, it starts answering questions. You can get down to where are we going to go? Because when you're looking for funding, they're looking to see if you're ready. That's where a lot of these surveys come in handy, because you've done your homework and you're showing readiness by having all this information gathered. Okay. You can do your own community survey to get your opinion, your community's opinion about what you need. I think sometimes you can partner your community survey with a survey like this. It depends on your community if you want to go this route for this survey, but sometimes I think it's really good to do it within yourself first, to do your own survey. We helped Wheeler County with their survey. We just completed a survey there, and then so now we're going to be starting to approach the communities. In that survey, we didn't just have housing. We had some other things as far as infrastructure and community needs. So when you're doing surveys, you may be trying to do a housing project, but don't be afraid to mix in other things in those surveys, because it can give you an insight as to other things that you're needing in your community. So that's what we're going to start with Arcadia. Any other communities that want us to assist them, part of the money that we're getting from NIFA with this advanced is going to be partnered with our EDA funds to help these communities with the time that it takes to meet with communities to do this strategic planning, getting those communities together and those the committees and things like that. That's part of what we're going to be using those funds for. That's a lot. Let me tell you, I could talk about housing for hours, but I don't want to. I would really like to hear from you now, questions, because I think we can learn from each other through our questions. What do you think, Sharon?
Judy, we were talking when you guys were on the tour, we were talking about Superior and that we are clearing some lots down there. And so it would be a good opportunity for some infill housing, talking about what those prices might be and whether or not we can get that market value for a new house. Can you talk a little bit about what opportunities there are for infill housing, but not high-end? Superior has some nice higher-end homes, right. So we're talking about affordable infill.
Well, that's the tough part. If we were in a better housing market, things would be so much easier. But prices right now are through the roof. I'm waiting. We're in the bid process right now with the City of Ord for some housing. We've done some spec housing, for up in Stewart. For a 3-bedroom, 2-bath, unfinished basement, about 12 to 1,300 square foot house, we're looking anywhere from $140,000 to $175,000 per home.
How's that run compared to the rehab, like Northwest?
We are actually doing a modular home through Prairie Gold Homes. That is a program that is being run. The contractors are actually prisoners at Nebraska State Penitentiary and some of the corrections. And so we have that in Sargent right now. It's a home that it's got a crawl space, it's not a full basement, and that's going to run about 135, 138 is what it's going to be for about 1,200 square foot. I'd have to get my calculator out. But here's the problem that we're seeing in smaller communities is if you haven't had any recent sales of homes that are comparable, the appraisers have nobody to compare it to, so it's really hard to provide a comparable that they have to go such a far distance sometimes that it gets kicked out, and then they're appraising it lower. They'll appraise it lower than what you actually put into the house, which is hard if you've got somebody that's income qualified for like our programs. Now, if you've got someone that's not income qualified and has the money that you can put down, more to put down, and you would probably agree, Cheryl, you know, if you've got more money to put down, then you have more opportunities to be able to buy that house. The secondary market is getting tight right now. They've got unbelievable rules. Our organization with our down payment assistance right now, we cannot provide down payment assistance to a home buyer that is getting an FHA loan. Because FHA, if you have to be an FHA approved lender, and there's a process. It's just like being a bank. You have to go through a process to be an FHA approved lender. So we are not, and when we've been getting these grants for these communities that they have down payment assistance, FHA is not an option. One of our great options is USDA. That's a really great option. We've been going there. Some of the other secondary markets that are not USDA and that are not FHA are now looking at FHA's rules and carrying those forth, which makes it tighter. I had a house in Burwell. We were pulling our hair out because we couldn't get them an FHA. We couldn't even get them a secondary market because the underwriter was requiring FHA rules. We ended up going through USDA with a guaranteed loan. USDA has direct loans and then guaranteed loans that go through a bank. And for these homes, because of the price, they have to go through the guaranteed program. So that's how we made it work. Also, it used to be, you know, your down payment assistance, that would count as your down payment assistance. And even with USDA, I learned this, Pat, you may be putting $30,000 in that down payment assistance into that home, and that's still not good enough. USDA still wants, is it 5% of the purchase?
Depends on the underwriters.
Yeah. There's another percentage of personal funds that families have to put into these homes in addition to our down payment assistance. They're not counting it like they used to anymore. So it's driving us all crazy out here.
There's communities that have LBA 40, which is a local option tax you can use for economic development purposes. You know, some communities here have it and some might not, but more communities are using it for housing projects, including down payment assistance or incentives to build in town. It depends on how your plan is written. The community writes and approves the plan through an election process. But they just recently added people recruitment as an eligible activity, and so they're using it as incentives to bring people back. And then, so Wayne's done some down payment assistance. There's a couple others that have used it, so it's just one more option that you can partner with or use instead of if you don't qualify. If you have any questions, let me know later. I can talk to you.
And that would be if they were over income, right?
Yeah, you could put whatever eligibility within that you want to.
Okay, but I'm pretty sure, Cheryl, they wouldn't be able to, you know, like USDA would not count even that LBA 40 as the down payment. It has to be personal funds and stuff, so.
It would just be additional incentive to the individual, not necessarily matching funds for another program.
right.
LD 40, yeah.
Yes, Dina?
I really, wherever I go, I work with small businesses, and I just keep getting flooded with questions about housing and housing. I've learned a little bit from you all over the last 12 years, but at least I know who to contact. But with all these programs, do you still see a gap that's not being filled?
Yeah,
what would
the gap is really at, that mid-level income household, that we're trying to get families in, and Steve, you'll probably, see that too, is for the homes that are, priced in that 150,000 range, there's a fine line right in there about affordability. And it makes it tough, because it also makes it tough in small towns when you're trying to, if you're building a house for 150,000, then people go, yeah, but it's not going to sell for that. We can get something like that for 50, over here or something like that. And that makes it tough when you're trying. I think that has probably been one of the hardest pieces about trying to get new housing into a community. But that's the range that we're having to try and recruit people back in, is not necessarily the lower income, it's the middle.
Steve?
Well, and then something you see in small towns is people that are in a small house or whatever, as soon as a bigger house or a nicer house comes along, everybody wants to move up. Mm-hmm. So you end up with the lower standard houses.
Right.
Setting empty, or nobody wants to fix them up. And then you've got, I'm assuming you're talking middle income, is like school teachers. Some want to rent, and some will buy, hoping they're going to be there for several years. But most of your school teachers, if they're going to stay there and raise their family there, that's one thing to buy a house. But you have a lot of school teachers that might be there for 2 years or 3 years and move on, so they're just looking for a decent house to rent. And that's where a lot of your housing shortage comes in, is decent houses for teachers and people like that to rent.
We actually lost a teacher from Chambers down to the south central part. I can't remember what town, but they were looking for a place just to rent, to get down there. And it was unbelievable, the stories of the houses that they were shown.
Yeah.
Houses that didn't even have flooring. Half plumbing.
I add to this, the root of the problem a lot of times is a lack of contractors to build.
Yeah.
And they have no interest in speccing or trying to do something when they're out customizing. Farming's been great. We all know that farmers, a lot of great ranches being built, really compared to 20 years ago. I think that's great. So there's a shortage of contractors. And then the other root, I think, is condition of a community won't support rents. And a lot of that's because you've got too many dilapidated houses. And the root of that is nobody's enforced codes. And maybe if you don't have a comp plan, you can't enforce codes because you can't have zoning ordinances. If you don't have zoning ordinances, you can't enforce codes. So you gotta think about this as a big cycle. And if you can't support higher rents in the community, it's tougher to support. Because, hey, I can rent a house. We were just talking about this up in Bassett. I can rent a house for $200. Why would I, have to pay, build a new one and pay, $600 a month for a housing payment, and then they never think about the $400 heating bill, which maybe some other agency like the Midwest might have to pay a huge cost.
Exactly.
And all that. So it's a tough nut to crack.
Part of that, the other half of that equation is you have low-cost housing in towns like Franklin or Red Cloud, because you have low-paying jobs at the nursing home or whatever. Somebody that's making $8 an hour,
Right.
how can they, they've got to live in a $150 or $200 a month house to afford to live there. And so when you've got low wages in the community, they talk about minimum wage. If you jump the minimum wage of everybody to $20 an hour, I guarantee you everybody's rent's going to double immediately. Because if the money's there, the rent will go up.
Right. Pat?
Have you heard anything about investment clubs or local investors utilizing that as a tool as a way to bring the cost down?
Well, I think there've been some groups that have done some investing over the years. Stewart's a really good example that they did, theirs was not tied to income. So they built a house, they did a number of homes through the investment club. One of the things that, because when we first started, we were so stuck on the low to moderate income, we kept hearing from these communities, but we need more than that. We need the higher income housing. And then, people saying, well, I sure would, I would love to invest in something. Now, some people are looking to invest and make money, okay? But are there some people out there that are interested in investing into their community to help out? They see a need to do that. Some communities have foundations that their guidelines would allow for that kind of investment by investors into a project. Some have foundations that don't have those rules. Nebraska Housing Developers is a nonprofit organization, and what we have done is we haven't really launched it because we didn't want to get crazy. We wanted to try it in a community and see which community we could start with, but it's a donor-advised fund program. So if you've got a group of investors that want to invest in housing, let's say they want to do a spec building project, they want to build a house to sell, invest through our organization, they get the tax write-off over here, okay? The money comes into a pot, we build the house, it comes back into the pot, it never goes back to them, it stays here, and then we build another one. We just keep investing into that community. They've gotten their tax write-off, with the IRS, and so it's something that we want to try on a small scale in a community first before we start really getting it out there, because with this transition with the district and stuff, there's been a lot of challenges and things to pull together, and I don't want my finance person to go crazy and quit on me. Yes?
Are you considering rehabs for those projects, or is that all new construction?
That would be something I sure would like to look into, because here's one of the things that I've been thinking about with these communities. Okay, so if it costs too much money to build a house and it doesn't appraise out, is there a way to acquire some land, some houses, rehab them, and then resell them? It's called purchase, rehab, resale. But sometimes they're just needed for rent. And one of the things we don't have that, just like big towns, is who's going to manage them? Who's going to be the property manager for those? I think there would be a lot more opportunity for properties to be rentals if there was somebody that would manage them. Is that something that, a community could think about? Who could do that? I've not yet. Oh, for our rural banks, a lot of those, they do things in their communities, for.
Are you talking about CRA as in Community Reinvestment Act, or are you talking?
Yeah.
Like Central City used their CRA
Oh.
to purchase some land and things like that.
Okay, you're talking about the Community Reinvestment Authority, which is,
Right.
or Redevelopment Authority, which is like blight studies and that
Right.
kind of thing. Okay, it is noon. We said we would have lunch at noon. It's, are you ready for us for lunch? Okay, so please continue the discussion over lunch, though. We haven't even begun to talk about purchase, rehab, resale. We haven't begun to talk about Crown, the rent-to-own programs, and I know Judy's done some of that. So there are some other opportunities. Ask questions, talk to each other. I missed Steve earlier. I apologize when I said we have people here. Steve Peregrine with NIFA is here to talk to you about what they have and answer questions. I'm sure Meredith will answer questions about what MIT can do in the area. Again, Cheryl Larson and Pat Compton. We just keep drawing her back into housing. She's been out for how long now?
1 year.
Yeah, a year, but
6 days, and she misses.
yeah. But Christy McClung was going to come. Shannon Fortney is out of state. She is our rep for this area. She asked Christy McClung to come, and they had, her father is very ill, and she was not able to be here. And I said, you know what, don't bring somebody out from Lincoln. Pat can fill in the gaps. So Anyway, we appreciate all of you being here to ask questions, and those of you that are providers to be here to answer questions, but we will get our instructions for lunch now, and then we can just continue the discussion.